Auckland Townhouses are down about 3%, same as houses. I don't think it's necessarily the case that there's a massive glut of townhouses that is dragging down townhouse values.
And welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 8th of June 2026. I'm Head of Research Nick Goodall, and today I'm joined as per usual by Chief Economist Kelvin Davidson. Kelvin, I'm keen to chat a little bit about the new build market today, off the back of the latest building consent data. We'll do that shortly though, but I thought first we can talk about the May Cotality Home Value Index, which of course came out last week. I think, we had a brief look at it last week saying, with the weekly index, which pretty much preempted the result. So quite impressed with that weekly index that is on our website for the big three centres, New Zealand, Christchurch, Auckland and Wellington. But yeah, do you want to take us through some of the detail there, how the release went, any surprising results? I know you might have struggled to find too many surprises in there, but yeah, give us your thoughts, mate.
Yeah, there wasn't too much surprising, to be honest. It was a bit of not a battle as such, but I was trying to write it in a more interesting way than perhaps would normally be the case in terms of you can talk about some interesting stuff in the data, but this time I was trying to bring in a few more phrases, I guess, to make it a bit more interesting because the figures were pretty plain vanilla in some ways. And yeah, the weekly index preempted it pretty well. So the overall number was completely flat at the national level, 0.0% change in May. The weekly index had preempted, a bit of growth in Christchurch and maybe some modest falls in Wellington and Auckland. We pretty much saw that. These are all very small changes. I mean, Christchurch was up 0.4, Wellington was down 0.3. So you're not talking about sort of massive changes. It's all pretty flat, almost wherever you look. There's a few regional hotspots, if you want to call it that. I mean, Invercargill is still seeing a little bit of growth, but even on an annualised rate, it's maybe 5 or 6%. So yes, it's growth. I mean, for property owners, that's going to be good, but it's it's definitely not the scale of boom we've seen in the past. So, overall, it's really just tracking sideways was sort of the vibe coming out of the data. And I mean, in the next few months, is it going to change in either direction? It's pretty hard to say. I mean, well, I guess we all hope for this Iran situation to end as soon as possible. But even if it does, there's still going to be some disruption there for a while. And interest rates have lifted. I see ANZ lifted interest rates last week. Economy is showing signs of weakening. So just in this environment, I mean, no one's sort of having to move too much in either direction. I guess. I mean, buyers have the pricing power, but there's not many forced sellers out there, so people are sort of just taking their time. It's all just sort of tracking sideways, still a lot of listings. So yeah, I mean, it looks like we could be in for a few months yet of reasonably flat house prices, and yes, there'll be some regional variability, but I'd expect we see similar trends over the next few months too. So yeah, flat result.
Yeah, no, exactly. I mean, I can hear in your voice, it's hard to sort of get too much from this because it is, the things we've been talking about previously, it is kind of a slight turnaround, right? We saw some momentum at the start of the year. We've expected that to start to turn around, turn flat, maybe turn negative for a short period of time as well. I think that really is occurring how we expect. So it is hard to glean too much from the result itself. I think that's why we tend to start talking about what does it mean for the future, how is this going to shape up over the coming months, and you've pretty much preempted that as well. We do expect to see more of the same. We will see, maybe some of those values decline as well. That nationwide figure, I do expect to turn negative when you look at some of those forecasts from official places like the Reserve Bank. We do expect those values to just struggle for the next few months as well. I agree it is dependent on the war in Iran. If we do see a turnaround there, then maybe partly, the greatest impact that would have is a turnaround in confidence. People knowing that means that, things hopefully globally can get back to some level of normality, and so they can start to act on things that are going on rather than worrying about what the future's got. They can start to have a bit more optimism, and maybe that seems them act a bit more regularly and frequently in the economy, and that flows through to the housing market. So totally agree, it does depend on that length of disruption that's going on in Iran right now. I'm starting to go, we are literally one day short 5 months of the election. So do we start turning our mind to the potential impact there? I know we've already been talking about some of the things and potential for a change in government and what does that mean. And of course, there's been conversations about what a comprehensive capital gains tax will look like and what influence that might have. So I do wonder if we start looking at the potential impact of that election date. Typically, we say that, it does slow down activity if there's, it's just more uncertainty really. And that might lead to more people sitting on their hands and not transacting in the market. So I think that's a fair assumption. We're going to see something like that. There's been a few, conversations about, does it speed up some conversations about people buying property if they want to get in before there's a change in government? But if the things are going to change after the government, then do you really want to be owning more property afterwards? I suppose we need to wait and see. But yeah, it is sort of time, I think, to start considering what that could look like. But yeah, I think in the shorter term, it's, it will slow down activity. I still think we don't really see too much change in terms of value growth or otherwise, no matter who wins the election. I think there's some greater fundamentals that are having a much more significant impact, such as increasing interest rates, than anything that the government can or would do anyway. And my line continues to be that, even if you did bring in a capital gains tax, it's not going to have a massive impact on capital growth in the future, mainly because we know that all countries around the world that have a capital gains tax, it doesn't change the market. You don't bring a capital gains tax in to try and slow down property growth. You bring it in because your tax base needs to change, not because you're trying to slow down capital growth in the housing market. So, yes, it will have some impact. And I guess, people's expectation will be, if I have to pay a tax, there's less demand going to occur to buy that property. But I don't see it as a major changer. It's more of around the edges that it's going to have an impact. So that I still remain pretty clear on that in my mind. I don't know if you've got any different thoughts in terms of your considerations leading into this election, a few months away now.
No, not a huge amount. I agree with all of that, and actually, I think people on the ground are probably agreeing too. A few events I've been to lately, there definitely seems to be. I mean, obviously, a property investor would prefer not to have capital gains tax, but I don't think it's the biggest deal for people because, of course, you only pay it if you sell, and theoretically you've got the cash to pay it, and if capital growth is going to be less in future anyway, well, you're probably investing for different reasons, and the actual tax you're paying on capital gains will be lower too if capital gains are lower. So, yeah, I just think it's probably not necessarily the biggest deal for people. And there hasn't. I mean, yes, people are chatting about it, but I mean, and the election as a whole perhaps isn't featuring on the political radar just at the moment because of other things that are going on. But I suspect even if it was, maybe the policy chat would be around other things rather than CGT anyway. So, yeah, we'll see. It might ramp up again, but just now, I don't think it's too big on people's minds. So, yeah, interesting one.
Yeah, we'll see. Is this a good opportunity to cover off this sort of chat in the last week or two off the back of, tax changes in Australia about New Zealand apparently being a tax haven for property investors to come and buy here, mate? I know you've got some thoughts on that. Do you want to voice them here?
Yeah, I just struggle to see how we're a tax haven for Australian property investors. Surely you're investing cross border as well. You're introducing a whole lot of complexity around your tax arrangements anyway. As I understand it, yeah, if you're an Australian buying here, you'd avoid our capital gains tax if you hold for at least 2 years. You'd avoid the bright line test, but you may end up being stung for capital gains tax in Australia anyway. And then not least the whole thing, our government might change. We might bring in a more broad-based capital gains tax. Who knows what changes might be made around sort of the cash flow and income side of things. And then, do people really invest for tax purposes anyway? You'd want to think that the other factors are just as important. What rental income am I going to get off this thing? Am I going to have a tenant? So that sort of thing you'd think would be just as important. So I think it's probably a bit of a media headline, to be honest. We're going to see our market flooded with Australians. I find it hard to believe. So we'll see if that plays out or not.
I couldn't agree more, mate. I just think it's such a headline. It's driven probably out of Australia as well because it's people that are saying, we don't like the tax changes, so we're going to go invest somewhere else. And I just think it's a lot of headline grabbing really than anything else. Maybe Australians are more likely to, consider buying a holiday home in New Zealand. And I'm sure Queenstown is going to continue to be an attractive place for Australians to buy because they want a place to go to if they do like to holiday here. And yes, of course, they could rent it out and, there might be some benefits there. there. But to me, the biggest benefit from a tax purpose seems to be we don't have stamp duty, right? And that is a pretty significant thing in Australia, where every time you transact, you've got to pay that tax, and we don't have that in New Zealand. And I think people don't like that tax in Australia. So of course that probably makes a lot of sense, but everything else about it, I just can't buy into. And especially when you consider what we've been talking about at the start of today, which was we expect there's capital growth in the future. So what if Australia gets stronger capital gains? We get lower capital gains. Yes, you might have to pay a tax over there, but if the property value is going up faster, then you're still going to be doing better, even if a little bit more is going towards the tax man. So yeah, I just can't buy it at this stage. It's likely a bit of, I don't know, not quite scaremongering, but certainly gnawing of teeth at tax changes that nobody likes. But ultimately, it's not really going to force people to can massively uplift or change their investment plan and suddenly start buying in a country, even if it is as close to home as New Zealand and Australia are. I just don't see it happening for a majority or a large number of people that you truly see an impact anyway. So yeah, we won't give it any more airtime then, eh?
Yep, agree.
Okay, all right, let's move on to the external sort of data out last week. And as I touched on at the start, I do want to chat about sort of that new build market. We've got building consent data for April last week. Do you want to run us through that data? And then I'm just keen to, once again, it's probably I don't know, maybe the first time in a month we can sort of talk about this new build market. It has featured a lot in my market update presentations, and I'm keen just to give it a bit of a conversation anyway. So you take us through that data, and then we can maybe talk about the broader new build market and expectations on that side of things as well.
Yeah, I mean, more growth for building consents. These figures were April, so you're taking in a couple of months now of the Iran conflict. There's going to be lags, and maybe these consents were actually applied for back in January, February. I don't know. So that it's probably not necessarily a full Iran impact yet. But that being said, there was still growth in April. I think we've had 9 months in a row of building consents being higher than the same month a year ago. So it's pretty consistent growth. The annual total is up to around 39,000 now, just a touch above, which is pretty good by historical standards. The trough going back sort of a year or so was 33 and a half, 34,000. Even that was a pretty good figure by past standards, even at the bottom of the cycle. So there's sort of two sides to this story in the construction market at the moment. I mean, it's been a deep downturn, no doubt, but it was coming off such a high base that it was almost sort of artificially high, and it's made the downturn look a bit worse than perhaps it has been. Now, yes, on the other hand, there's been issues for builders, of course. There definitely has been some trouble there, but as a country overall, we've still got a decent pipeline of houses coming through, whether that's standalone or townhouses. We have seen a bit of a shift, but 39,000 dwelling consents still pretty good by past standards. So yeah, there's I mean, a bit like the whole sort of capital gains tax, are we a tax haven, this sort of thing. There's probably a bit of a there's media headlines around construction too, and I've had these questions lately about, oh well, oversupply of dwellings, how terrible. It's like, well, we can't have it both ways. I mean, people complain when there's a so-called shortage of houses, and then we turn around and say, well, oh no, it's terrible when we've got an oversupply. I think most people would say, well, isn't it good to have more rather than less? So there's a bit of yeah, maybe this is our sort of rant session today, but yeah, some of the headlines lately I think have probably been a little bit clickbaity. And as I say, what would you rather have? Too few houses or too many houses? Probably too many. Yep, might not be so good for developers, but I mean, they made the choice to build those houses, and it's a commercial decision. You take that on the chin. So yeah, overall, dwelling construction still going pretty good. Yes, it's lower than that massive peak, but that was probably too high anyway. So we'll see how it plays out. There are challenges coming through in terms of surcharges. Flat house prices mean that builders, can they really pass these costs on? Because the existing dwellings are pretty flat. If your construction costs are going up, it's probably a bit of a squeeze on margins rather than necessarily being able to charge a higher selling price. So issues there. Households facing higher mortgage rates. It might not necessarily be the case that this upwards trend for dwelling consents stays there, but we're starting from a decent level already. So yeah, I tend to take a more optimistic view about construction. Yes, there's challenges, but it's not as bad as it's been in the past. Put it that way.
Yeah, exactly. I go more broader than that, and to me, it's the comparison or the context of it within the economy. And I want to talk shortly about potential oversupply, and especially with questions around townhouses in Auckland. We did get an email from a listener this week, which I want to talk about shortly. But yeah, I think for me, it's about that broader economy, right? Like when you put this in context of, as you say, 51,000 consents at peak, and I don't think we were ever thinking that was sustainable or realistic that we were going to build all those consents anyway. And I do want to, acknowledge the fact there's a consents there, an intent to build. They're not all going to get built anyway. I totally get that. And I also don't want to downplay the difficulty that the construction and development industry's been through, right? We know these liquidations and they're real. These businesses have gone under. But, the fact that we've seen a turnaround, and like you said, we got to a trough of 33,500 consents, which is pretty decent levels. Well, we've talked in the past about how there's capacity to build somewhere between 35 and 40,000 consents per year, or build properties per year. To drop to only 33 and a half, a little bit below that, to me shows that it's an industry that's much more robust and resilient than anything we've seen in the past. I know we've talked about it a lot, but we do talk about in the global financial crisis, consents dropped to as low as 11,000 in 1 year. That's a holding out of the industry, and it took a long time to rebuild that. These firms that did go under had bad lending, lost all their staff that either went somewhere else into a different industry or went overseas. So we had a massive holding out, and you look at this long-term chart, you see how long it takes those consenting numbers to build back to 20 to 30,000. We just haven't seen that this time around. Yes, in that short-term context, 51 to 33,000 sounds like a massive change, and it is. But also that 33 is a decent low level, like you said. We're coming off a pretty high base this time around, and the fact that it's grown over that last 9 months to 39,000 is, I think, impressive. The context I give as well in some of the updates as we look back to that building construction pipeline report, which is a report I think put out maybe 2 or more years ago from the likes of Brands and MB, where they had this pipeline expectation report. And they didn't have a lift in consents. And this is before all the recent disruption, remember, until 2028. And I think that's just a recognition of, when we go through a recession and the economy starts to slow down and go into negative times, the construction industry is one of the latter industries to come back. We've seen the agricultural and rural industry be the one that's holding our economy up. We've seen, did start to turn around in that tourism industry. We did start to see some improving retail figures over the summer period. I know that's now dissipated. But, we don't expect, I don't think, for that turnaround in the economy to flow through to construction for, 18, 24 months usually. You see a rebuild in the economy, and that flows through to the construction industry quite a bit down the track. I think because it takes a while for that confidence to come back, for those businesses to start to reinvest, for people to start to have that confidence to engage in a new build that they're not going to move into for 18 months' time, unsure about jobs or interest rates. You just don't go and engage in those types of properties. But this time around, we saw that turnaround come much sooner. We're in 2026. We've seen that uplift come through maybe 2 years ahead of a normal schedule. And so I just don't think that has kind of been given the credit it deserves for what I think shows a much more robust and resilient construction and development industry, and much more, I think, responsible lending practices. That's from both the builder side, where they're not taking on too much debt at low interest rates, knowing that they can't, might not be able to pay it back in higher interest rates, but also better practices from the banks themselves. Now, partly, of course, regulated by the Reserve Bank, but also the banks are just much more sensible about their lending anyway. Test rates, all of these things going on are ensuring that they are offering lending out to people that can handle it. And again, don't want to downplay those businesses that have had it tough and they have gone into liquidation, and that's been tough, not being able to handle higher interest rates or changes to their input costs, and difficulty in getting labour, and maybe it's just some timings which have been difficult on them. Of course that's happened, but when you look at the broader market, it's probably a relatively smaller proportion this time than it has been in the past. And again, that's meant that the rebuilding has happened much sooner than we expected. And I think it's a good sign that, also the consumers are taking the opportunity where the value aligns. So if it's more value and engaging in a new build because you're going to get a better property, and you do feel confident enough in your income and job and interest rates and where they're going over the medium to longer term future, they're willing to go and engage in those new builds. Do due diligence with the builder that you're going to use. Make sure that you feel comfortable that they're doing things well and going to still be operating in 12 or 18 months. You're not going to be left in the lurch with a half built property. but they are willing to go and engage in that, and they're getting value out of that new build compared to what you'd get in the existing building, right? Like you're going to have lower maintenance. It's hopefully going to hold its value better in the future. Whereas if you buy an existing property, it might cost you more to maintain that, to improve the quality of it, and heating that property. All these other things are starting to weigh on people's minds, and I think that's starting to lead people to go, man, if I've got the option, I will go engage in that new build as long as I have confidence in that industry, and I think this is showing that people do too. So I don't want to get carried away with the positivity either. I do think we need to acknowledge that that 39,000, if it hasn't peaked already, it's probably going to peak very soon, and it will start to downturn because, as you said, the construction industry will be impacted by the disruption of the Strait of Hormuz and everything that goes on with that, because it's so reliant on getting things around the place, right? The transportation of the goods and services is going to be impacted by the cost of diesel, the cost of oil. All of these things are going to flow through the construction industry more than some other industries. So look, it's going to be affected in the coming 3, 6, 9, maybe even longer, 12 months. So expect that to downturn again. And I think the building work put in place data shows that the construction industry is slowing down already. So I'm not saying it's all fine and dandy and we're home and hosed and it's going to be cruising through 2026. That's not the case. But I do think we shouldn't underplay the resilience that's been shown in the last 12 months or so. So yes, I think that's where I wanted to cover for this one. We probably should touch on the fact that there's consenting data shows that we're still building a lot of smaller dwellings still, despite that commentary about potentially we've got too many townhouses that have been built, particularly in Auckland or pockets of Auckland. So I think we need to acknowledge that too. But those consenting figures show that it's remaining above 50%. So despite people saying I think we've got too many, we still continue to buy them. And I think those developers and construction firms that continue to build those are doing their due diligence and know that the demand for those properties remains. If they do it right, it's at the right price point, they're still continuing to see consents being done there. So again, I think there's more evidence there that we're doing the right thing. We continue to build. We're building the right properties in the right place. Not saying it's perfect, but we're going to continue to see that happen over the next wee while too. So yeah, that's kind of my, as I say, rant or take on that one anyway. I do want to lead this into this conversation or this question that we got from a listener. So I want to say thanks very much to Matthew for emailing through to me. I'll pose the question that he's given, and then maybe you can give your take on anything I've thrown at you or answering Matthew's question anyway. So let me jump into that. The question is, when might we finally see some sustained capital growth in Auckland? This is someone obviously hoping or expecting to see some capital growth. As he mentions, there's 3 false starts. We've seen some growth come through and then it dissipates not long after. And yep, 3 false starts and counting. There might be more of these to come with little false starts. So absolutely agree with him there. He has put an assumption in here, which I think is an important one. Let's assume Hormuz opens in a few months. So I think that's, the way that the Reserve Bank starts to talk about things too, expected to be disruption for a couple more months. And let's also assume, Matthew says, that national forms of government, coalition government, so they win the election, so there's no major tax changes. I think that's an important assumption to make as well. And then his question then flows through to, how do you think about the Auckland Townhouse glut? Is it responsible for very high listings? Are they bringing down stats overall? And is it essentially a separate market with lower demand? And this is as we've talked about, the fact that we have sort of heard that there's so many of these townhouses being built, and that their price is having to come down to attract buyers, and that's dragging the overall market in Auckland down. And obviously, your supply is quite high because we've seen all these townhouses go through consent, be built, come to market similar time, and the demand's just not there to sustain the selling of those, especially at a certain price. So, yeah, mate, that's me talking for a long period of time. Do you want to try and just start to answer that question? I don't know if you get any other thoughts onto, where I was trying to put that context of the broader economy and where the industry fits in that. And yeah, take us away.
Yeah, I guess there's a couple of angles to look at this townhouse development boom in Auckland, and not trying to put a sort of subjective judgment on this. I mean, you've already referred to when are we looking for house price growth again? That some people have that perspective, others won't. So there's always 2 sides to it, and also I guess the development pipeline. I guess some people would be happy if it stopped, and but others are happy to keep it coming through because it sustains housing affordability and gives people a wider choice of stock and all of that. So there's always going to be different perspectives here and different angles, but I suppose what our stats from our new home value index, or reasonably new, it's been around a while now, but it's newish. What it allows us to do is look at property types, and we can actually split it down on a really rigorous basis between townhouses, for example, versus standalone dwellings. Now, for both property types, it's not great in Auckland if people are looking for capital growth, but there's no real difference in performance. So over the past year, for example, on our index, Auckland townhouses are down about 3%, same as houses. If you look at from peak to trough, or peak from where we are now, it's about 22% for both property types. So I think what it tells you is that, yeah, there's been a lot of townhouses built, but there's still, at least in relative terms, demand for them. People aren't buying them any less than they are buying standalone houses. Like the values have performed, pretty similarly. So I don't think it's necessarily the case that there's a massive glut of townhouses that is dragging down townhouse values particularly. I think it's simply that if you look at all property types across all of Auckland, you have increased supply, and that is diverting demand to different parts of the market, and overall keeping a lid on property values, whether that's houses or townhouses. Because of course, any given buyer could go, well, I'll buy that standalone house for $1 million or that townhouse for 800 grand. You know what? I'll take the new build townhouse. So yes, it's changing demand patterns, but overall, I think the bigger point is that you add more supply, of any type, you do sort of keep a lid on values. So now within the townhouse segment, I've definitely heard anecdotes about there's a sort of quality gaps opening up, and yep, some types of townhouses in certain locations might not be so desirable for some people versus other types. And we'll have to see how long some of these townhouses last, how durable they are, that sort of thing. But I think overall it's not necessarily the townhouse values are collapsing due to some sort of perceived oversupply. I also did a fairly quick bit of work just around trying to see, is there any particular suburbs where there's been a big spike in the number of townhouses, and has that seen values really collapse? And there's no real correlation there. You can find suburbs across Auckland which have seen a big lift in townhouse supply, but the values haven't sort of collapsed relative to other suburbs where there's been less of a rise in townhouse supply. So I think it's, there's no real strong pattern here of a big construction boom being correlated with a collapse in townhouse values. And I guess it also just came to mind. I mean, I live in Selwyn, for example, and everywhere you go around Selwyn, there's just new houses popping up everywhere. And yes, they're different types compared to what's being built in Auckland. Our index adjusts for that. The mix of property won't be a factor here, so you can't really point to that. We've seen development in Selwyn yet. Now they're not booming, but yet house prices are just ticking up ever so slightly. So, I don't think the supply story is the full picture. I mean, for an economist, yes, it tells you a lot, but I think also probably what you're finding in Auckland is that that confidence factor is missing. The economy is pretty lackluster, as opposed to somewhere like Selwyn or wider Canterbury, where the economy is going okay. So, yep, supply tells you something, but it's not necessarily the full picture. And if you contrast somewhere like Selwyn with Auckland, you can kind of start to get a more full picture, I guess, of it. So yeah, I mean, to answer the question, and when do we see capital value growth in Auckland again? Well, some people don't want to see it, so there is that two sides to the equation. And I think probably what it takes is, yes, I mean, a reduced supply pipeline would help. We're probably seeing that now. The pace of construction growth is perhaps slowing down, but there's still more coming through. Probably what you also need to see is an economic rebound. Now, who knows really when that's going to happen, or an economic and confidence rebound. I mean, 2027, with a question mark, it's probably that kind of timing. But also, if and when we do see capital growth re-emerge in Auckland, it's like we've talked about, it's probably going to be slower than in the past. There is reform of land supply. We might see taxes change. Interest rates can't trend down. So, even when we see some capital growth re-emerge, which we probably will at some point, it may well be more subdued than in the past. So, yeah, I've got a lot of notes here. I think I've covered off all of those key points, and hopefully that answers the question. I mean, always two sides to the equation. We will see capital growth re-emerge at some point, but it might be a wee way away, pending the Iran situation. And also, when it does emerge, it might be slower than the past. So, just some thoughts.
Yeah, no, I think it's good. And that was the best thing, right? To put some data to this. I don't want to diminish people's experience because if they are seeing it day to day in their lives, that those, there's been lots of townhouses built in an area maybe, and they've noticed price drops. Those are real. And I don't want to diminish those people's experiences, I suppose, but it is good to put that, more comprehensive data together. And the one that I want to labour was the data you spoke about, suburb change over time. And just to reinforce what you said there, it was about looking at where, by suburb, there's been a significant increase in the number of townhouses in the area. And then also looking at, by suburb, what that value change has been over time. And the key thing that jumped out was that those areas that might have seen, 5 to 10% increase in the number of townhouses in their suburb, which might be an area where you go, yep, there's been heaps of building there. We're going to see the values of those properties not be able to hold up as much or maybe decline more than those areas which haven't had an increase in supply because the demand's not there to sustain it. But there's just no correlation. The change in value was similar across all those suburbs, regardless of how many townhouses or what the townhouse supply level had increased by. And that was the one that drove it home for me. I think partly because the way I had been talking about this was there will be pockets of Auckland which might be oversupplied. There's too many townhouses in areas where people maybe don't want to live as much as they do other areas because there's not great supportive transport networks, or they're not in areas with areas where families or people want to go where their schools are where the schools are, where the kids are going to go to school, or close to parks. There's amenities that people want to live. If we're building houses in places where people don't want to live, then yeah, you might see those areas not do so well. But there's just no correlation here between where the townhouses have been built and where value growth has maybe been worse. And that was the one that really drove it home for me, because I thought that maybe we would see, when you look at that more granular level, we do see some difference, and it's still not showing up. My thing was always, at an Auckland-wide level, we need to keep building. We need to keep building these townhouses. We've had strong population growth in the past. We expect it to come back in the future. And so we need to continue to, build properties to make up for the deficit we created in the past and keep up with population growth in the future. And, that's why I think we touched on a few weeks ago that net migration has not turned negative overall. It's remained net positive. Yes, it's been at low numbers, but we've continued to see more people move here than leave. Not New Zealand citizens, but we've had more people move here than leave. And we've got to bring in household, creation numbers and all that sort of stuff. We're trying to actually get a figure of under and oversupply, and it gets very complicated, and we're not going to touch on that today. We have in the past. But I think that's the thing for me. And so, yeah, like I say, getting back to the original question, which is, we want me to see that growth. I still think it is looking at that broader economy, confidence come back in the job market, and migration come back a bit stronger too. That, up to half or more of all migrants come into New Zealand are actually going and settling in Auckland. That's a significant portion of demand, but it's going to be about, can they get the job? Where are interest rates at? What's happening from a rental perspective? Can rent start to increase off the back of that, rental demand as well? That's when things are going to start to improve from an investor's side, and that's when we might start to see things change as well. And yeah, just to I suppose finalise on one point from a townhouse perspective. They are a good entry level property in many cases. We've seen strong first home buyer activity, including in Auckland, which somewhat surprises when you see the overall median price. You go, how are first home buyers affording that? Oh, well, it's actually because there's good entry level properties being built that are available in the, I don't know what a first home buyer property is in Auckland, 7 to 8 to maybe up to $1 million if you're a double income, no kids, working in Auckland. You could probably get to that $1 million with lower interest rates, 5-6%. We've seen that sustained level of activity from first home buyers. So they are buying those properties, and they probably like the fact that they're pretty low maintenance. Once they're new as well, they can live pretty easily in those properties. And if they've got strong connections to the CBD, if they haven't even go into town for work, then that's pretty attractive from a, youngish person's life perspective. So, yeah, I think there's lots in there. Hopefully it all sort of makes sense to people. But I think it's a great topic, right? So I just want to, thank Matthew for getting in touch. I tell you what we should do, Kelvin, is we will email Matthew direct that chart, because to me that's the one that jumps out. And if anyone else does want to see that one, I'm sure we can get that to you. And we'll probably form part of our conversations and market updates in the next wee while as well. So yeah, we might just email him back that chart so he's got that visual, because as I said, that was the one that jumped out to me. But yeah, that's probably rounds out the chat around new builds, mate. Is there anything else on your mind from a new build perspective you want to talk about?
Oh, there's always things, I guess, but yeah, that's pretty wide ranging chat. So I think that should help. We'll leave it there.
We can leave it there. Okay. Well, I mean, the other one to mention is that, some of that data does come out via our mapping the market data. I know that data is getting updated this week. It'll be out live on Wednesday. Of course, if you haven't seen the mapping the market tool on our website, freely available to anyone to go look. All suburbs across the country, and handily in the last year or so, we did split that median value by townhouses or flats and houses. So you can start to see this as well. It's got the median value today of every suburb, a median value a year ago, and that changed over that period of time as well. So you can actually come and see some of this for yourself by toggling that on and off in that tool. So look out for an update to that on Wednesday, but it's updated every month anyway. So if you go and check it out now, you can see the change between May and May, but from Wednesday you'll see the change between June and June. So go and check that one out. The other one I was trying to touch on was that I did a Financial Advice New Zealand webinar last week. There was 4 of us that spoke on that, including Paul Conway, the economist from the Reserve Bank. I just thought I could report back. It was obviously available to many of our listeners would have watched that webinar. But for those that couldn't or didn't, I thought that, the couple of things from my mind that jumped out just hearing him speak were, his relative confidence that he did sort of reiterate they expected the inflationary impact was short term. And I think that probably gives us a decent feel as to why he and maybe some of those other internal members on the committee voted to hold the official cash rate a week or two ago, because they have that confidence that inflation is relatively short term. And again, when we talk about their expectation for how long this disruption exists, if it is months, then they're definitely hopeful or expectant that inflation will come back down close to their midpoint, and that the weaker economy is going to get it, do some job to get it back down again as well. I suppose, I still hold this position that I think their economic forecasts are still relatively optimistic in terms of the growth they expect our economy to go through in the next year or so. And so again, I think, that probably explains why, they also think there's going to be those increases in the future. They don't see there's massive impact to an increase in the OCR, say next month, having a massive drag on the economy. And so they're also confident to make those increases in the future, even though they don't necessarily need to fight the inflation because they know that it's going to be medium term. But it also makes me wonder that if we do continue to see worse economic data come out in the next few weeks, then maybe it just, will cause them to have some caution in lifting the official cash rate in that July decision. I don't think it's a lock just yet, because if we continue to see weak economic data, maybe that'll weigh on them and they'll go, actually, our economic forecasts are too optimistic. It is going to be more damaging for the economy, and that's also going to have downward pressure on inflation. So we don't need to get ahead of it with OCR increases sooner rather than later. Now, I'm not saying that it's, changing from, I don't know what the odds are, 80-20% chance of an increase. It's not going to go down to 50-50. But I just think the more economic data we get, and if it is weak like I expect and not as strong as they expect, then maybe that just weighs on their decision to continue to wait longer before they push through that first OCR increase anyway. So that's kind of, I don't know, the way it influenced my thoughts. Anything triggered in your mind there, Kelvin?
Oh yes, it's weighing up all of these different things. There is this discussion, I guess, about what they should do, what they will do, and it's all very well to have these sort of, purist kind of academic arguments and, what they should do, and actually there's a difference between what they actually will do on the ground. And, I can see both sides of the argument. It's, I guess we'll just kind of wait and see what happens on the 8th of July. I know for traders and things, there's a bit more on the line than that, but I think there's still arguments both ways. Maybe for me it comes down to, what's the path of least regrets? That seems to be it's something that's been sort of running through their sort of analysis and monetary policy decisions for quite a while now, under a couple of governors. So, what's the least regrets thing? And, you can probably argue that as well, but it's, given their number one target is inflation, it sort of feels like, your least regrets would be to make sure you don't let that get out of control. So that's kind of, what's going around in my mind, but yep, I mean, the economic data hasn't been flash, and that will eventually bring down inflation, but I guess that's the word, and eventually, how long can they wait? So let's see.
Yeah, no, good wrap up. And I think, that's why it's the debate rages, because then it's all about interpretation of data on, what is inflation going to stick around, what of the inflation is going to be sticky, and then also, what of the recent read of the economic data, how damning is it on where economic growth is going to come from. And that's where I think there's debate, because that data is not clear. And every month we get another form of it, but it's also still not the clearest information. So I think that's where the debate rages on, and it will continue to do so, which will keep us busy. So that's all good. Sweet, mate. Well, that'll do us for property and economic chat for today anyway. I do want to have a bit of sporting chat today. There's too much good stuff going on. So if you're only here for the property stuff, then thanks very much, and we'll catch you next week. But Kelvin, look, I was back at the Cake Tin on Friday night for the Canes to absolutely hammer the Brumbies, despite the weather not really enabling great running rugby. The Canes just too good a skill level. So that was pretty impressive, and great to see the semi-final this weekend against the Blues scheduled on Saturday, not Friday, because I wouldn't be able to make the Friday night. So I'm glad they took my schedule into account when they put that date forward. And personally, I just can't wait for the Chiefs to and the Crusaders to beat each other up on Friday night, and hopefully be a little bit, walking wounded before they come back to Wellington the week after. And yes, that's a very confident line that I'm saying, because I just cannot see the Blues beating the Canes. Maybe terrible, too overconfident words, and it's going to come back to bite me. But given recent form and what the Blues lost the last four, Canes looking pretty good when they got their best team out there, and they could, actually rotate a few players at the end. They're looking pretty good for that final. So look, I will touch wood, and I know this is going to be recorded and played back to me if it goes awry on Saturday. But yeah, hard to see it going any other way. But yeah, that's the rugby chat, mate. Did you manage to catch any of the rugby over the weekend?
Yeah, bits and pieces. My wife was away for the weekend on a sort of girls' weekend away, so I was juggling parenting, but yep, there was plenty of time in the evening for watching rugby as well. So yeah, enjoyed that. I mean, the games ended up being fairly one-sided, but I think once we get to next weekend, it'll be all on. Particularly that. I mean, I agree. It's hard to see the Hurricanes losing, isn't it? So that'll push the final into Wellington, and probably a lot of interest from a I guess a general perspective will be on that Chiefs Crusaders game. That's a biggie. I mean, in Hamilton, Crusaders looking good, but Chiefs at home. Who's got the stronger team? It's up for grabs. So be interesting to see the TAB odds on that one. You'd think it'd be fairly even. So
Yeah.
and they'll beat each other up, and be set for the Hurricanes in that final. So plenty to watch.
I think either way, we're for a good semi-final on Friday, and then whichever way the final, whoever gets to the final, it's going to be a good game. There's no doubt about that. Given all these three teams sort of are getting form at the right time. But the other thing I have to touch on, man, I can't believe it's waited this long, is that obviously we've got the Football World Cup starting this week, and given this is our final, podcast before the World Cup starts this week, and the All Whites, obviously they played against England on the weekend, and I couldn't catch all of it because of kids' sport, but have seen decent highlights, and I think we certainly good to see the improvement from the week before against Haiti. So that was good. I mean, we haven't even touched on the Tim Payne phenomenon that's taken off, and I saw this morning his latest Instagram numbers have him with more followers than the New Zealand population. So it really has gone from absolute nothing to crazy levels, and it's going to give more interest to the All Whites, which I hope is a good thing. Doesn't cause too much of a distraction, and hopefully we can get at least a result or two in our pool games as well. So very excited for that one. I've ordered some shirts for the kids, not just New Zealand ones, but they'll get to pick another team as well. So we've got Brazil and Argentina and South Korea jerseys turning up shortly for my kids. So I'm firmly going to get them into this, and looking forward to the big wall chart going up, and I suppose predicting some of those results, and just a great time and great kickoff times, and hopefully with it being in the United States, there's not too many dramas, particularly with Iran being there, of course. So there's plenty of intrigue from that perspective too. But look, I had to throw it in there. My pick for the tournament winner, and I did pick this a few years ago, is Germany. So I think they might sort of come back and be there, but it's hard to not think France will be there. They're about to go and made the last two finals. Spain obviously very good as well. I totally get those TRB favourites, but Germany probably my pick, and expect Mexico to do pretty well too. I think they've generally done well when they've hosted these tournaments, so I expect them to challenge and certainly get close along those knockout games. So there's a couple of picks for prosperity, mate. How much do you get into the Football World Cup, Kelvin?
Yeah, I'll watch a bit. I was actually just looking this morning in terms of how you actually see it. I believe it's not on Sky. I was kind of just assuming it was on Sky, and I'd see that. But you have to tune in on TVNZ. And it's the global game, isn't it? You got to take a bit of interest. I'm not a rampant football fan, but I struggle to believe that Tim Payne is the least famous player at the World Cup. I mean, I've heard of him, maybe because I'm from New Zealand, but yeah, I'm like, there must be someone less famous than that. But anyway, good for him. I mean, I see his Instagram value's gone up from nothing to tens of thousands, per post or whatever. So yeah, it's a bit like, I mean, my cricket thing of striking at luck in the IPL or whatever. There's some random contracts seem to go out in that IPL. So yeah, good on him. Make hay while the sun shines.
Yeah, you wonder if there must be some players that don't even have Instagram, and so it was sort of, I don't know. He can't have gone through all 48 teams, 26 players. How many players is that? But he can't have gone through every single one of those. So yeah, there must have been something else to convince him to follow him. But anyway, he arrived where he arrived, and I think from everything I see regularly of Tim Payne, and does seem like a great bloke. And so hopefully we can say it couldn't happen to a nicer guy. And yeah, who knows how he makes the most of this? Does he go and play somewhere in South America? Who knows? And yeah, you can probably sell Instagram followers. I don't know how that all works, but maybe that's something that could happen in the future too. But yeah, as I say, very, very interesting and amazing to see how it goes. And yeah, and then let's just hope it's not a distraction and the All Whites do great, and there's some signs there that they'll do all right. So looking forward to that, mate. But look, we better close things out today. It has been a lengthy chat today, and I'm running late for my next engagement, so we better close it out there, Kelvin. But yeah, just want to say thanks very much for your thoughts and doing that work as well, just to look at that data on the townhouses versus houses stuff as well. Really good to put some data to that. And yeah, just great to chat as per usual. I will see you, of course, in Melbourne on Wednesdays. We've got a Trans-Tasman research team sort of strategic catch up this week, so no doubt we'll come next week very enthused as to what the future holds for our team and some new and different things we can get hold of and steal from our colleagues in Australia. So looking forward to that one too, mate, and we'll talk probably briefly on Monday about that, but we'll talk about it next week anyway. Just as I say, thanks again. Thank you very much for listening. Please do get in touch with any questions or feedback like Matthew did. Always great to get those questions from you. But that'll do us for today. My name is Nick. He's Kelvin. You've been listening to New Zealand Property Market Podcast. Mā te wā.